Welcome back to Trading with CJ. Let's talk about Gevo. Those of you who have been following my channel for some time will know that I'm a massive fan of this company. And last night, they released their earnings. They brought them out a day earlier than originally planned. But yeah, they released their earnings. And I'm going to come out and say it from the offset. They are not amazing. However, we never thought these earnings would be good. I have posted everywhere that we are not expecting anything great from these earnings. This is a company that we have been following for months and months now, weeks and weeks. We started buying this one at $5. It ran all the way up to around about $15. It's since had a pullback. At this moment in time, we are open, but it currently trades for just over $9. So we're going to get into the earnings. We're going to have a look at some of the good points, some of the bad points, and we're going to go through my thoughts on this one going forward, price predictions as well. If you appreciate all of this, please go ahead and smash the like and subscribe to my channel. I also just yesterday launched a brand new Patreon where you can get access to my buys and sells every single day, exclusive videos, exclusive live streams, portfolio reviews, and a lot more. Check it out. The link is in the pinned comment. So yeah, let's get straight into this one. We are talking about Gevo. Look at the share price for a start, okay? We actually see this, like I say, run up to $15 per share. We just touched it, immediately pulled back. That was around about mid-February, roughly. In the last month, we've seen a lot of these stocks correcting, and especially the energy sector, and it dropped down around about 52%. Absolutely huge. It has since seen a recovery of around about 30%. So let's have a look at their earnings. So first off, this is a company, I don't think I need to explain much about it. You can check out my catalyst videos, my stock analysis videos, etc. on this one. But they're a biofuel company trying to get net zero carbon emissions. They first off, in their corporate highlights here, they go through exactly what they are trying to achieve. They announced their plans for the net zero project, and that was in January 2021. That's when we started to see this one run up. Net zero right now, with everyone moving towards renewable energy, that is an amazing goal to have. And they said that the net zero one is being designed to eliminate the fossil-based energy footprint to run the production facility, and that is expected to produce 400 million pounds of protein animal feed, 30 million pounds of corn oil, and hydrocarbons, which will be sold into gasoline and jet fuel markets, which is absolutely amazing. They can go into aeroplanes as an alternative fuel, a much more energy efficient fuel, and they're also expected to produce their own biogas as well, and this is going to use the heat from the production facility to provide 30% of the electricity needed to power the production facility. They have a massive goals going forward. They're also expected to have their own water treatment plant to further improve the environmental footprint. So that's kind of their overall summary here of what they're trying to achieve, and that was all announced in January. It's kind of working backwards from these highlights. I'm not going to read it all out because there's a bit to get through here. But in February, they signed their agreement with SAS, Scandinavian Airline System. We've covered that in a previous video. A nice deal there, and that's 5 million gallons per year across the life of their contract. And they are hoping here to be the expected supplier by Gevo's second net zero project in 2024. We're a while off on that one for sure, but like I say, this is a company with lots of ambitions, lots of goals. We didn't really expect it to be making much revenue at this moment in time, if at all any. And yeah, then we had, this was their big news, okay, in February, which we covered. They have been raising a lot of funds, share offerings, etc. And they now have $530 million of cash on their balance sheet. That is an incredible amount of cash. $530 million with no debt. Absolutely huge. And their current market cap is 1.8 billion. So just over a quarter of that market cap they actually have in cash, which is pretty good going for a company of this size. They believe that the cash that they have on their balance sheet now can fund the project equity required for net zero one, which is good. They haven't got to worry about drawing out more debt. They still have zero debt. They now have the cash to fund that product, which they say the financial close for net zero one is targeted for the first half of 2022. So like I say, things for this company are, we're talking about the future here. We're not talking about these projects. This company is not going to be a game changer in the next month or the next 2 months. This is getting started. It's very early days for this company, but they're building their net zero project. They're starting to get contracts underway, building up their cash, get rid of their debt. They're basically positioning themselves in a good position to take advantage of this growing market going forward. And in January, they also had this feed, which is expected to be completed in December 2021, end of this year. The completion of the feed work is necessary before the financing of Net Zero 1 can be completed. So that's quite important. We want that to get completed by December so that they can go on to complete the Net Zero 1 funding as well. And it goes on to talk about the raising of capital and share offerings, etc., which we have mentioned. And the last one here is in December, where they entered into an agreement for the right to purchase 240 acres of land near Lake Preston, and that is GEVO expects to construct its Net Zero 1 project on this land. That would be great. Once we hear about this construction underway, that will be a massive catalyst for the shareholders and for this company going forward. So now we get into their actual financials from the fourth quarter. Bear with me here, they are not great, okay? We know about their cash in that. At that time, there was 78 million. As like I say, it is now 530 million, substantially increased since. This is the fourth quarter results. We obviously have experienced a bit of time since. The revenue was 0.5 compared to 6.9. That's a big old drop off there from the previous quarter. Hydrocarbon revenue was 0.4 compared to 1 million. All of these numbers are down, okay, at this moment in time. Not massively, I must admit, we're not seeing incredible downs, but it is down nevertheless. That's almost half of the amount right there. Loss from operations is 7 million. So they are currently making a loss of 7 million for that quarter compared to 4 million in Q4. And the net loss per share, this was kind of the big one here, 0.15. Okay, the estimates rated, I think they analysts had this as 0.5 potentially, and you can see that's compared to 0.5 on the average shares outstanding. So the numbers weren't great. However, like I say, I don't think many people, surely not anyway, were hoping for good numbers with this. We haven't had any news about any deals or contracts other than the SAS, which, as we just mentioned, is for in the future. So we haven't had any current deals that are underway, so we shouldn't be expecting any revenue. If they made a massive deal on a massive agreement, we'd know about it. They would have put a press release out. So we imagine these numbers to be kind of like this. And the CEO here, Patrick Gruber, he says, Net Zero 1 is first of its kind off-the-grid type of plant. We are putting great effort into making Net Zero 1 the most sustainable plant it can be, which is good. We want them to make sure they are putting all of their effort into this right now. We don't want them to launch some half-assed project. We want it to be amazing when it does come out. And they're hoping with the debt financing that Citigroup and the economics of Net Zero 1 are attractive at this stage. I'm pleased we are making progress on filling up a production capacity at Net Zero 2 as evidenced by the recent SAS contract. So that is great as well. We mentioned about the SAS contract already. So why is the revenue down on this one? Well, they go into mention about it here, okay? They have a production facility in Minnesota, and they say here that related to the sales and products, it was 0 compared to 5.9 million. So that's where all that revenue has come from, which you mentioned about. So that is all gone down from 0. And the reason for that is because of COVID-19 and in response to an unfavorable commodity environment. So they didn't feel like it was suitable to be operating during these times. So they terminated their production and grains at the facility in March 2020. So last year they terminated that, and that's obviously been a massive drop off here, which is why we are down from the fourth quarter from the previous quarter because of COVID. So it was actually GEVO that terminated that, which is a good thing to see. People aren't pulling contracts in this company. GEVO felt it was necessarily the right thing to do in the current climate, and they shut it down until further notice. And at the moment, the Southampton facility is not producing renewable gasoline or jet fuel. GEVO expects to produce campaigns during 2021 to supply the demonstration plant at Southampton Resources. So this should be up and running in the Southampton Resources by this year, which we hope so, because then we should be getting this revenue grow again. So come the Q4 next year, these numbers should look a lot different to this Q4, that's for sure. This is also the same, of course, here for the cost of goods, 2 million compared to the 9.4 million, and they say this is as a result of terminating the production at the facility as discussed above. And the cost of goods sold included approximately 0.9 million associated with isobutanol related products and the maintenance of the facility, approximately 1.1 million in depreciation expense. These are numbers that you would expect given the fact that they have shut the factory down for this period of time. However, the gross loss was considerably less. Gross loss 1.4 million for the 3 months ending in December versus 2.5 million for the same period in 2019. So the losses they are incurring less losses here, that's for sure. But on top of incurring less losses, which is a good thing, they also are increasing their expenses here in research and development, which you don't mind. This is a company which is a game changer. A lot of their money has got to go into research and development for sure. And that is currently 1.7 million during the 3 months, so the last quarter there, compared to the same period in the previous quarter. And that is to increase in consulting and personal costs offset by investor relation and marketing costs. So, I mean, okay, the numbers are going up, but we'd rather them be spending a bit more on their research, getting this product exactly right, improving the marketing, etc. as well. The last 2 points from this really is the EBITDA loss which was 5.1 compared to 4 million. And then the net loss for the 3 months ending December 31st of 18.1 million compared to 6.8. So the numbers weren't great to see, okay, but the cash has been improving. They are underway with their Net Zero 1 project. They have got a contract with the SAS and that's the Net Zero 2 project. So I'm not gonna lie, I would have liked to see a bit of news potentially around some future contracts. Maybe we'll get that in the coming months. But this is a company that I still am fully convicted on. Nothing has really changed for me here. The numbers would have been better if they kind of remained similar to before. However, due to closing one of their factories down for pretty much a year, it does look a lot different to what it did in the previous quarter in 2019. So there is that to consider. So with all this considered, what am I doing with my position? Am I holding? Have I sold? Nothing has changed for me in this company. All the fundamentals remain. Everything is still the same. This is a long-term hold. I do not expect to see crazy gains in a short period of time. Of course, that may happen if a bit of news comes out. However, I'm not looking to sell it on a bit of news. This went up to $15. I was sitting on crazy gains. And guess what? We held our position. My price prediction, you know, I said $20 originally by the end of the year, and I still think that is possible if we get some potential contract news. This should easily be a $15 stock in my opinion. We are currently just under 10. But yeah, $20 by the end of the year. I stand by that price target. If it doesn't hit, I'm fine. I'm definitely holding. Have I added more at these prices? I haven't. I did not add any more today because it is my third largest position. Gradually almost coming my second. So I definitely am convicted on this stock. Hopefully we see some news coming out in the coming months. Maybe by the next quarter we may have a bit more acquisition. Once again, I do not expect the financials to be amazing, but over this course of this year, they should be recovering from the pandemic. Their factory can reopen. They can start to get some sales. And people are going to start hearing about this company. So that's my thoughts on Gevo. Let me know what you're doing with this one. If you want to know when I'm buying, selling, and get some exclusive videos as well, come and join us on the Patreon. Link is in the description. We also have a free Discord where we have a Gevo chat. You can come and join that as well. If you appreciate this, please go ahead and smash a like and subscribe to my channel. And until next time.